Okay, welcome to the deep dive. Today, we're diving into a stack of recent articles and reports you sent over. Sort of gives us a snapshot of the crypto news cycle right now.
Yeah, it's a really interesting mix this time.
Definitely. We've got headlines touching on, major institutions, specific asset price action,
hmm
different takes on where we are in the market cycle, and just some general buzz swirling around.
Exactly. And our goal here is really to look at these different pieces, see what they highlight about the current state of the market,
Right.
and figure out what the most important signals are for you to take away from this collection.
Yeah, I'm actually pretty intrigued by this stack. It feels like it captures a lot of the different forces at play,
It does.
From big finance hinting at moves to analysts, well, disagreeing on the future, all based on these latest reports.
It definitely paints a picture of a market navigating multiple, sometimes conflicting signals.
All right, let's jump into the first one then. This headline, it really stands out. JP Morgan. The source mentions a bold crypto collateral decision. Now, we don't have the full deep dive details from this snippet, obviously.
Right.
But just seeing a major institution like JP Morgan and crypto collateral together, what's your immediate read on the significance of that headline alone?
Well, simply seeing a traditional finance giant, like JP Morgan mentioned, in the context of using crypto as collateral,
Yeah.
that is noteworthy.
Yeah.
Collateral implies a deeper level of integration than just trading or holding.
Okay.
It's about leveraging digital assets within more complex financial structures, potentially for loans or other secured transactions.
Right, so more functional.
Exactly. While the source doesn't spell out the specifics of what this decision is, the headline itself suggests they are actively exploring or maybe implementing ways to make crypto functional within their established financial systems.
Mm-hmm.
It signals a potential shift, I think, in how these large institutions view and use digital assets beyond just speculative trading.
Okay, so that headline alone suggests they're finding more ways to kind of plug crypto into their world. Interesting. Shifting gears completely. Now let's look at market price action. One source talks about Bitcoin trading right near a triangle apex at 105K.
Ah, yes, classic technical analysis showing up in the reports.
Right.
So the source puts Bitcoin at a key point on the chart, that triangle apex, and notes the 50-day moving average is sitting just below current levels, acting as support.
Okay.
According to the analysis presented in this source, if we see a confirmed breakout from this pattern, their target is $110.
$110, wow.
Conversely, a breakdown, well, that would point to lower price targets. It's presenting Bitcoin at a pivotal moment, based purely on charting in that report.
So technically speaking, sitting right on the edge of a potential big move, according to that report anyway.
Pretty much.
Now, this next part is where things get really interesting because the sources give us two completely different takes on market cycles.
Right. The cycle debate, always lively.
Exactly. One article states pretty clearly that the hashtag crypto cycle 2024 eerily mirrors 2014-2017, not 2021, and it warns readers to brace for a rude awakening.
Okay, that perspective. It's arguing that the current market dynamics feel more akin to an earlier cycle, maybe less dramatic or more drawn out from, almost a decade ago.
Yeah, 2014-17.
Right, rather than the rapid ascent and peak we saw more recently in 2021.
Mm-hmm.
And the language used, like eerily mirrors and rude awakening,
Mm-hmm.
it implies that if this comparison holds, the outcome might not be what some expect, perhaps suggesting a less explosive or even, well, a negative future trajectory compared to those bullish 2021 comparisons.
So they're saying, be careful, this looks like the older, maybe slower pattern.
That's the gist of that viewpoint, yeah. Highlighting differences between historical cycles.
But then, right alongside that, another source also looks at cycles but comes to a different conclusion. It suggests signs point to a delayed but explosive finale and references the 2017, the classic climb and sudden fall pattern.
And this really shows how analysts can look at similar historical periods and draw, contrasting conclusions about today. It's fascinating.
It really is.
So this second source is also referencing 2017, but instead of comparing the entire 2014-2017 period to today for a, quote, rude awakening,
Right.
they're focusing on the climax of 2017, that rapid climb and fall, and suggesting we're heading towards a delayed version of that explosive move.
So one sees 2017 as part of a pattern, meaning watch out. The other sees the 2017 peak as something we might repeat just later.
Precisely. It highlights that historical comparisons can be interpreted in really different ways, leading to projections that are, frankly, worlds apart.
Yeah, one warning of potential downside, the other anticipating a major bullish peak. wildly different reads.
Based on different readings of history, yep.
Okay, let's zoom in from overall cycles to a specific asset that had a couple of very different headlines this week, XRP.
XRP. Always something happening there.
Seems like it. We see one report about a Chinese company plans $300 million XRP treasury plan, apparently by Weebus International, even submitting a Form 6K.
Okay.
And then, right next to that, a headline about massive liquidations on XRP triggered by just a small dip.
Wow. Seeing those two snapshots side by side for the same asset is quite telling, isn't it?
It really is. What do you make of that?
Well, on one hand, you have this report about a company, Weebus International, potentially planning to use XRP for a significant corporate treasury. $300 billion is serious.
Definitely.
And they're apparently filing an SEC form, which adds a layer of seriousness. If that materializes, it presented as a pretty significant move towards corporate adoption and utility for XRP.
That sounds like a positive signal based on that report.
It does, based on that specific report. But then the other headline immediately grounds you in the reality of market volatility.
Yeah, the liquidations.
Right. It talks about massive liquidations happening on XRP simply because of a small dip. This just illustrates the power of leverage in the market. Even a minor price decrease can wipe out leveraged positions, forcing liquidations which can then cascade and, amplify the downward move. That's exactly what that second source reports occurred.
So for XRP, the headlines simultaneously point to potential significant real-world use.
Right. Potential adoption.
And then extreme market fragility and leverage risk on the other hand.
It really captures the dual nature of this market perfectly.
It does. And we also saw other headlines, like one mentioning something called Arctic Pablo and various other altcoins.
Right.
Which just reminds you how much is happening across the entire spectrum of digital assets. It's not just Bitcoin or the big names.
Absolutely. And if we try to connect all these threads, what this collection of sources shows us is a market landscape currently pulled by several different and sometimes opposing forces.
Okay, so summing it up.
Yeah, you see hints of traditional finance exploring structured ways to use crypto, like that JP Morgan headline.
Right, the collateral idea.
You see technical analysis pointing to Bitcoin being at a potentially critical chart juncture.
The 105K apex.
You see analysts looking back at market history, but coming to starkly different conclusions about what's coming next. Those cycle debates.
Yeah, the 2014-17 versus the 2017 finale views.
And then you see specific asset news, like with XRP, highlighting both potential significant adoption and the brutal reality of market volatility driven by things like leverage, all happening concurrently for the same asset.
So what does taking in this mix of information really mean for you, the listener? How should you process all this?
Well, I think it underscores that there isn't one simple narrative defining the crypto market right now. It's not just about institutional adoption or just about retail volatility or just about technical charts.
It's everything mixed together.
Exactly. It's a complex interplay between all these elements. It's influenced by evolving institutional attitudes, technical price levels, differing historical interpretations, market sentiment, and of course, the specific dynamics of individual assets. Understanding the market requires looking at these varied signals together, even when they seem to conflict.
It's definitely not a straightforward story. So just to recap the key areas from these sources, we touched on the potential institutional angle with JP Morgan, Bitcoin sitting at that technical crossroads.
Right.
The striking contrast in how analysts view the market cycle based on history.
The different interpretations, yeah.
And those two very different reports on XRP potential treasury adoption meeting brutal liquidations from just a small price move.
And recognizing that all these signals, even the contradictory ones, are part of the picture.
Yeah.
That's key to navigating this space, I think.
Right. And, given those conflicting historical cycle analyses we saw,
Yeah.
and the simultaneous reports of seemingly solid institutional style plans like that treasury setup
Yeah.
versus the immediate, almost chaotic liquidations for assets like XRP, it really makes you wonder how much of the market's future direction truly depends on the long-term tech or adoption trends versus how much is still vulnerable to sudden, unpredictable shifts in sentiment and the actions of vastly different market participants. What really happens when long-term bullish visions collide head-on with short-term market mechanics like excessive leverage?
That's a great question. What happens when those two forces meet? Definitely something to think about.